Hello, very good morning to all, and welcome back to today's Daily Dose of Market Insights. And what an exciting day has been since Expo's FOMC. So before we kickstart our Daily Dose of Market Insights, very good morning. Today will be the Thursday, the 31st of July 2025. So let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. So as usual, before we jump straight to the gist of our daily dose, which is the latest intraday technical outlook on the four major US dollar pair, the six major stock indices, followed by the two key commodities market, which is gold XAU/USD and West Texas crude oil. Let's have a recap what has taken shape yesterday in terms of news flow, event, economic data, and as well as any important economic data and news flow that has been released in today's early Asia session before the start of our daily dose, which is at 11 a.m. Singapore time. So yesterday's pivotal move on the market will be a burst of that US dollar strength over here. So let me share with you the chart of the US dollar over here. Okay, so this is the 5-day rolling performance of the US dollar. So what I could see over here is that the US dollar actually burst up yesterday at this point in time. Notice that over here, okay, it burst up yesterday at the 8 p.m. Singapore time. All right, there's a short push up in the dollar over here. And what's interesting over here is that as we scroll down, this is a 5-day rolling performance. Let me take into account of a 5-day rolling period. So if you look at the shorter time frame, which is a 1-day rolling period, over here we start to see the dollar yen plummeting down. So right now there is actually a K-shaped performance in the FX market. Later I'll touch more about that. Why? It's more pertaining to the expectation of Bank of Japan. Later I'll touch on more about the Bank of Japan. We also have the Bank of Japan monetary policy out today as well. Right, so there's at this point in time the dollar continues to hold firm against the other major currency, but starts to plummet against the dollar yen. So the reason why dollar yen also from a technical perspective, the reason 3 weeks plus of rally has already come to an inflection level, which is the 149 figure level, 149.50, that medium-term pivotal resistance that we highlighted since the start of this week, where we got to be very mindful if we have a bullish short-term bullish bias, because at this tipping point we may start to see some form of weakness on the dollar against the yen. So later I'll touch more about that, all right, when I cover the dollar yen intraday technical outlook. But for now, what we could see over here is that we start to see a burst up in the dollar strength yesterday at 8 p.m. Singapore time. That was actually right before the FOMC. So let me touch about what this dollar strength is about, okay, over here. So what we could see over here is that the dollar strength was actually due to a much more better than expected US Q2 advance reading. So at 8:30 p.m. The statistical board of US released the GDP growth rate. That's the advance rate. So this is the first reading for Q2. So Q2 numbers came in way better than expected. Market expecting is 2.4% year on year, Q on Q, I would say, but it came in at 3%. And also above the previous quarter of a negative reading of negative 0.5%. So that actually kind of support a continuous of a firm, a rather resilient US GDP growth, despite this potential negative feedback loop that it could have thereafter due to the uncertainty surrounding a myriad of US trade tariffs policy that the US White House wants to implement over here. And also the dollar strength continues to burst higher after the FOMC meeting, and most importantly post FOMC meeting at 2:30 a.m. where Fed Chair Powell addressed the public during his press conference over here. So basically what causes the dollar to actually burst higher is due to the tonality of Powell during the press conference, because Fed Chair Powell continues to be rather stubborn. He do not want to shift towards the dovish side, and he continues to say that he do not have a preset cost of rates over here. So what's interesting over here is that despite there's actually two Federal Reserve officials dissent in favor of a cut. So Fed Wheeler and Bowman. So especially Fed Wheeler, those who followed my daily dose, I've been mentioning this guy's name over here. He has been rather dovish since about 4 weeks ago. All right, over here. So with that, let us now quickly go through what are the key pointers of the FOMC meeting over here. So yes, rates are left unchanged at 4.25% to 4.5%. So that is within market expectation. And what's surprising over here is that two governors, Wheeler and Bowman, dissented favoring of a rate cut. So this is the first time we have two governors voted against the committee since 1993. All right, so right now there is a kind of intense debate among the FOMC members over here. And Powell, during his post-meeting press conference, turned down the likelihood of a rate cut in September, and he continues to be rather holding firm about his data-dependent stance over here. And he thinks that the all right, over here. So what we could see over here is that and regarding about tariff outlook. So while there is more clarity on the tariff outlook, because we know that ahead of the 1st August of deadline, we have preliminary deals that's being struck between US and US and EU, US and Japan, and as well as US and South Korea or something like that. But Powell saying that there is still a lot to come on that front. And by not rising interest rates now, the fact is if they're looking through a tariff effect a bit, okay. But he also noted several times that good prices has come up in some categories. So it seems to us that in his thinking that he's still pretty much cautious about the secondary knock-on effects on these tariffs that could actually allow inflation to be rather stubbornly elevated at the 2% target that the Fed set a floor over here, so above the 2% target. So because of this, he continues to maintain a rather firm data dependent stance, and he kind of talked down the potential interest rate cut in September, and that causes the odds by the Fed funds futures traders previously assigning about 67%. We have shared with you in the Fed chart, in the Fed CME Fed Watch 2, and now has gone down to below 50%. So if you look at the CME Fed Watch 2 over here, all right, so this is the CME Fed Watch 2. So if you look at the previous meeting, prior to yesterday meeting, okay, so now the next meeting will be 17th of September. So previously, market expecting the Fed funds rate to be down at 10 to 4.25% at a rather high chance over here. All right, so a day ago it was about 63-67%, which I highlighted, and now it has been reduced to below 50%, only at 43%. So market participants in the Fed funds futures market now has reduced their dovish bet pretty significantly. So if you look at the aggregated tab over here, where it shows the latest we call it odds of US Federal Reserve rate cuts, rate hold, or rate hike according to the Fed funds futures traders price action in the Fed funds futures market. The next cut right now has been the impending 25 basis point cut for 2025 has been pushed for later down the road. So right now we know that the earlier higher chance of 63% or 67%, where the Fed funds futures traders assign a rather high probability for the 17th of September FOMC meeting, has been reduced now to only 43%. And the next cut, the impending 25% rate cut will now be pushed down the road later to come in at the 29th of October, which is at 79.5 and chance. And even the second cut odds has been reduced. Previously, there was a high chance of a second rate cut of more than 50%, about 70% plus, to come in the last meeting of 2025, which is 10th of December 2025. So that has been reduced to 43%. All right. So what market participants now are looking at, only potentially one interest rate cut in 2025. All right. So that causes the dollar to actually strengthen to a 3-month high yesterday. So if you look at the US dollar index over here from a daily chart perspective, all right, so the dollar continues to push up over here and is now hovering at a 3-month high. So it seems to us that right now is doing this potentially multi-week corrective rebound retracement to retrace this major downtrend phase from the high of 13th of January all the way down to the low of 1st of July. Over here, that means indicating that this major downtrend phase may have already reached a terminal point in July, and right now we are doing a multi-week corrective rebound phase to retrace a certain portion of this former major downtrend phase from the high of 13th of January all the way down to the low of 1st of July that may have already ended. All right, so if you do the Fibo retracement, so this is the dollar index over here. Okay, so the next resistance level to watch will be at 38%, 3.2%, followed by the 50% level over here. So basically 100.40, a breakout above it potentially sees 102, which is the 30.2% Fibo retracement. And then thereafter, potentially we may start to see the 50% retracement coming in, which is at this 103.46 level, which is close to the key 200-day moving average as well. So net overall, what we are seeing right now, there is actually a fundamental shift in the marketplace right now, especially on the expectation of Fed funds interest rate cut over here. So the 2 interest rate cuts initially anticipated by the Fed funds futures traders has been greatly reduced to only 1 interest rate cut, which I explained to you guys. And the interest rate, the 1 interest rate cut has been pushed down the road over here. Instead of a September cut, now market participant is looking at the October cut, and that causes the dollar rebound to actually extend further, as you are seeing right now. And this extension has starts to change the technical picture as well, and causes it to have a higher chance right now to do a multi-week medium-term corrective rebound phase, to retrace certain portion of that former major downtrend phase of the US dollar index that has taken shape from 14th of January to 1st of July. All right, so basically this major downtrend phase has already more or less has ended, and now we are doing a multi-week corrective rebound sequence on the US dollar index over here. And very interestingly, that causes the US stock market to actually tumble as well, as Fed Chair Powell press conference ongoing over here. So there was a tumble over here. And what's interesting over here is that suddenly there was a reversal at the last hour of not the last hour. In fact, at the last 30 minutes of yesterday US session, there's a bounce over here. So very similarly, the bounce was seen on the Nasdaq 100 as well. Not so much on the Dow Jones, okay, also on the Dow Jones Industrial Average. But what we could see over here is that the Nasdaq 100 managed to close higher in the green at 0.16%. So this higher in the sole positive return by Nasdaq 100 is actually causes by the some of the mega cap technology stocks over here. So let me share with you guys. If I go into the Finviz at this point in time. Okay, so it's actually kind of test 1 2 3. Mic test 1 2 3. Test. All right, good. So my apologies, there's a bit of technical glitch at the a short technical glitch due to the drop off of the mic over here. So hope that all is good right now. So basically what we are looking at is at where was I? Yeah, at the closure of yesterday US session, which is after 4 a.m. Singapore time early today morning, we have the release of the two mega cap technology stocks that has a significant weightage on both the S&P 500 and the Nasdaq 100, which is Microsoft and Meta. So Meta, before the release of their results, it was down by a fair bit, which is negative 0.7%. Microsoft managed to have hover around the unchanged mark with a minor gain of 0.13%. But after their earnings and forward guidance managed to beat market expectation, both of these stocks actually rallied quite a fair bit. So what do I mean by this? So if you look at Meta platforms over here. So after the release of their earnings results and their forward guidance, after 4 a.m. Singapore time, the stock price shoot up by 11.5%, and that's a whopping double digit to fresh all-time high at 775. And very similar for Microsoft as well. It shoot up by a whopping 8.3% to a fresh all-time high as well. So these two push up in the mega cap technology stock, Microsoft and Metal, allow the S&P 500 to actually bounce up at the start of today's Asia session. So both the S&P 500 E-mini and the Nasdaq 100 E-mini surged by 0.9% and 1.3%. And what's interesting over here is that yesterday's intraday sell-off during Powell's press conference managed to found support right exactly at our short-term pivotal support that we highlighted both on the S&P and the Nasdaq 100. A bit of whipsaw on the Dow Jones Industrial Average, which is the US Wall Street 30. Later, I'll cover it more in greater detail when I touch on the intraday technical outlook, right, on that segment itself. So other news flow that has taken shape or economic data that is released before the start of the daily dose is this so-called MBS manufacturing PMI from China. So this is the state compiled manufacturing PMI out from China for the month of July, both for the manufacturing and the non-manufacturing. So nothing really big changes over here. The numbers going to hover around a lackluster level. So the manufacturing PMI for China for July continues to be in a contractionary mode, below 50 level. Came in slightly below expectation. Market expecting 49.7. It came in at 49.3. And the non-manufacturing side with the services side, yes, it continued to show growth, but the growth has been rather tepid around the 50.1 level. So what do we mean by this? Okay, market is expecting it at 50.3. It came in at 50.1, slightly below expectation, and also below 50.5 printed in the month of July. Yes, it's still expanding, but the rate of expansion is not great. So if you look at the trend on the services industry in China, right? So it continues to be rather flattish since March over here. Yes, anything that's above 50 is growing, but the rate of growth is not fantastic as all. It's rather tepid over here, right? Even though it's above 50 level mark. So what we could see over here is that means the services industry in China is not showing any robust growth. And with that dollar strength coming back into the picture, that actually hurt the Hang Seng indices over here. So the Hang Seng index is actually down by negative 1.16% as we are speaking right now. And the rest of Asia is rather mixed. We start to see the Nikkei 225 performing rather well, up by 0.9%. From a technical perspective as well, we start to turn positive yesterday. So later I'll share with you guys on the intraday technical outlook on the Nikkei 225. And the rest of Asia over here, what we could see is a rather downbeat. Okay, with the Kospi 200 index, which is the benchmark for the South Korea benchmark of the South Korea stock market, is down by negative 0.4%. TAIEX, which is the Taiwan benchmark stock index, is up by 0.4% thanks to its heavily concentrated semiconductor stocks, which managed to actually see a positive feedback loop from Nasdaq 100. The STI is down by negative 0.7%. So that is actually the fourth consecutive down session for the STI after prior 15 days of very red hot rally. and the rest of Asia is also down as well. Australia ASX 200 is down by negative 0.2%. So I would say that it's more of a downbeat mood for Asia Pacific stock market, with the exception of TAIEX, Taiwan benchmark stock index, riding on the positive coattails of the Nasdaq 100 sharp rally, and as well as the another outlier, positive outlier, will be the Nikkei 225, up by 0.9% over here. So now let's take a look at what BOJ has over here. Right, so BOJ should have already made an announcement. So market is expecting no interest rate hike so far, so which is at 0.5%. But however, on the quarterly outlook report over here, market participants is expecting BOJ to actually revise its interest rate forecast for the financial year of 2025 over here. So previously BOJ forecasted to be at 2.2%. Market is expecting a 3 basis point increase to 2.5% due to the secondary knock-on effects from tariffs. So let's see what is the outlook report like. So let me go to this third party Forex Live. So they could have a summary over here of that quarterly outlook. So it's easier for me to actually flesh out. Okay. Yeah, correct. So actually it actually rose the inflation forecast over here. Okay. So it actually rose the inflation forecast. All right. So basically full post of the statement. Okay, give me a minute. It's hang. All right. Okay, so this is it. Okay, so basically unchanged on its short-term interest rate, 0.5%, but the forecast for fiscal year 2025 has been revised upwards. Previously, it was 2.2% from 2.7%. And what's interesting over here is that market participants, right? Let me share with you again. Market participants do not expect any change in FY 2026 inflation forecast at 1.7% and FY 2027 inflation forecast at 1.9%. But however, BOJ is much more hawkish in terms of the inflation forecast. It actually kind of go against market expectation and raise fiscal year 2026 inflation forecast by 1 basis point from 1.7 previously to 1.8%, and even the 2027 fiscal year inflation forecast has been raised as well to 2% to 1.9 from 1.95% previously. And both these forecasts for the core CPI forecast as well. So for the core CPI, we strip out both food and energy, also has been raised to 2.8% in FY 2025 from 2.3% previously. And also the core CPI forecast for fiscal year 2026 has been raised to 1.9% from 1.8% previously, and while maintaining the core CPI fiscal 2027 forecast at 2%. All right, so naturally, in a nutshell, what is BOJ officials thinking? So BOJ official thinking that inflation trend will remain continue to firm up in FY 2025 to FY 2027. So that potentially keeps the hope of at least one BOJ interest rate hike before 2025 ends alive. So that causes the yen to actually strengthen in a fair bit over here. So the dollar yen continues to remains on a weaker footing as we are speaking right now, down by negative 0.3%. So there's now a K-shape in the FX now there's a K-shaped performance in the FX market. That means, i.e., the dollar strengthening against the other major currency, but the dollar is not strengthening Test, test, test. Mic test 1, 2, 3. Testing 1, 2, 3. Test, test, test 1, 2, 3. Okay, I think the sound is back. All right, good. My apology about that. I think it should be my the internet connection. It keeps dropping off, so it causes the mic to actually suddenly auto drop off over here. So that everything works fine now. Hopefully no disruption, because it's very important today to share with you all this latest technical configuration after what has taken shape so far. Very important with the Fed and the BOJ. Okay, so where was I? Yeah, so we covered the BOJ over here. So right now, right, most important, let us talk about gold. So what I could see over here is that we know that gold has an indirect correlation with the US dollar. So the US dollar strengthening against other major currency, with the exception case of dollar yen, which I explained earlier to you guys, the driver of it due to BOJ higher inflationary trend forecast, latest forecast. The gold has now started to face downside pressure as it broke below the medium-term pivotal support level of 3,300 over here. So what I could see over here is that it could be in the midst of much more further downside pressure, at least in the short term, all right, as it continues to congest in this very complex sideways range, seeing the fresh all-time high of 22nd of April 2025. So later I'll share with you the short-term technical level to watch. But for now, at least in the very short term, the bears are in control rather than the bulls, given the fact that even in the technical configuration right now, there is clearly no return of a bullish impulsive up move sequence, as price action broke below 3,300 medium-term pivotal support, and we are now in the potential situation where it could float downwards towards this lower limit of this rather complex sideways range configuration since the start, since the fresh all-time high of 22nd of April over here. All right, so now I've covered much ground for now on the first segment of today's daily dose. So now let us move on to the second segment of the daily dose, which is the intraday technical outlook. All right, over here. So with that, let me expand my screen. Right, so hopefully that you guys able to see the screen right now. So let's start with the FX market. So we know that the dollar strength has continued, has extended in the US dollar index, and the US dollar index has the euro dollar is the biggest weightage component in the US dollar index. So what we could see over here is that the euro dollar continues to actually plummet downwards over here. So it broke below our pivotal support yesterday at 115.20. The RSI continues to show no signs of a bullish reversal, as it's going to inch downwards over here. Right, there is this parallel resistance. Okay, that is keeping in check the bulls over here. This is parallel descending trendline resistance at this point in time. So what we could see over here is that the RSI, yes, oversold, but there is no bearish bullish divergence, lower low. So with that, we continue to see potential downside pressure exposed FOMC. Yes, there could be a bit of minor bounce taking shape today. So I would actually use yesterday's swing high area, which is exposed FOMC, as my first resistance level to watch over here. Potentially, if there could any bounce coming into the European session, pivotal resistance level will be yesterday's pivotal support, now turns to a pivotal resistance at 115.20. Flip to a bearish bias stance for today. Next near-term support level to watch after 114 figure level will be 113.70 / 113.60. Then thereafter followed by 113.10 / 113 figure level next. However, only a bullish push up and the hourly close above 115.20 that would invalidate today's intraday bearish bias on the euro dollar to see a squeeze up to retest 115.70. A breakout above 115.70 potentially sees the bulls coming back to revisit 116.80 in first step, which is the former medium-term ascending channel support, now turns into a critical pullback support, pullback resistance, and as well as confluencing closely to the downward sloping 20-day moving average. So that's for the euro dollar. Next up will be the sterling dollar. So sterling dollar, yesterday we have a neutrality stance over here. So given the bearish outlook of the euro dollar, the sterling dollar may also continue to face downside pressure as well. So what we could see over here is that the RSI has broken below this parallel what you call it, former bullish divergence, all right, over here now turns into a pullback resistance level. With that, I will be using this rejection level here at 133.15, which was rejected yesterday, which was the former minor swing low of this Tuesday. Breakdown turns into a critical intraday pullback resistance yesterday upon the press conference of Fed Chair Powell. So this will be a rather critical level to keep potential bulls in check. So this will be my pivotal support level, a pivotal resistance level for today, pardon me, at 133.15. So I will use 133.15 as my short-term pivotal resistance on the sterling dollar, flip to a bearish bias. Below 132.50 exposes the next near-term support zone at 131.70, 131.40 next. Only a bullish breakout above 133.15 will negate today's bearish bias. Pardon me. Only a breakout and hourly close above 133.15 will negate today's bearish bias to see a squeeze up for at least a kind of a short-term intraday rebound to revisit 134.10, followed by 134.70, which is the potential, which is also the confluence very closely to its downward sloping 20-day moving average as well. So that's for the sterling dollar. Next up will be the Asia Pacific currency, starting with the Aussie dollar over here. So what I could see over here is that the Aussie dollar also broke down below the 20-day moving average and the 50-day moving average. And if we were to look at the daily chart of the Aussie dollar, it seems to be right now that is actually now coming back into this what I call rather weird sideways expanding wedge configuration. So what I could see over here is that this Aussie dollar, okay, is taking on the form of this, oops, okay, give me a minute, yeah, okay, taking on the form of this rather very weird expanding wedge configuration, right? So we start to see the higher high, and we start to see slightly also higher low as well, all right? So it's something like a expanding wedge, all right? So the next support level to watch will be close to the 20-day moving average at around the 63.90, 64 figure level over here. So right now, after yesterday's dramatic sell-off of the Australia dollar, the Aussie versus the dollar over here, so what we could see over here is that potentially right now there could be some form of bounce taking shape over here. All right, potentially there could be a rebound taking shape, given that the Aussie dollar now there is a slight bullish. There's a bullish divergence over here, right? So there's a bullish divergence. So given the rather steep, we call it steep, so-called a sell-off yesterday, and with this bullish divergence that's being formed on the hourly RSI, there could be at least some form of retracement taking shape, given that yesterday's intraday low met with the 0.64 Fibo extension on the downside. So that could be also a potential fifth wave target with wave 1, wave 2, wave 3, wave 4, wave 5. So in terms of the Ilios perspective, after every 5 wave, and where the low of that 5 wave made at the Fibo target extension level of 0.764, and coupled with a bullish divergence on the hourly RSI, indicating that this could be the end of this minor downtrend phase from the high of 24th of July all the way down to the 31st of July, and potentially there could be some form of a retracement or a we call it a relief rebound scenario after this overextended down move where a fifth wave target has been made to retrace some of its losses that was seen previously. So with that, I will use yesterday's intraday low, all right, which is at this 64.25 level. Okay, let me put it in writing. 0.6425 ST pivot. Okay, 6425. Okay, this will be my first resistance level to watch. 6470. Yesterday's bearish reaction upon Fed Chair Powell press conference, then followed by 65 figure level, which is very close to the 50-day moving average. Right, so if you do the Fibo retracement of this minor downtrend phase from 24th of July high all the way down to yesterday's low, that these two levels of confluence with key Fibo retracement level, the 23.6%, and very closely the 38.2%. All right, over here. So I'll be watching closely 64.25 as my short-term pivotal support level. And given the two key elements that I shared with you guys earlier, indicating there could be a chance of a minor we call it a corrective rebound sequence, or minor corrective counter trend corrective rebound sequence, due to the elements that I share with you guys to retrace a certain portion of that prior minor downtrend phase that may have already concluded on yesterday's intraday low, using 64.25 short-term pivotal support level for this potential minor counter trend rebound phase to play out. Two key resistance to watch on the intraday basis will be 64.70 followed by 65 figure level. But however, if price action starts to break down below 65.25, then potentially it could actually hit the next key support level to watch will be 64.90, 63.90, which is the 200-day moving average, and as well as the lower limit of that rather complex medium-term sideways ascending expanding wedge configuration that I highlighted to you guys earlier. So that's for the Aussie dollar. Next up will be the dollar yen. So dollar yen, like I mentioned over here, is that it continues to inch downwards below the pivotal resistance zone, the medium-term pivotal resistance zone of 149 figure 14960, which is also being highlighted below the key 200-day at the key 200-day moving average, as price action continues to trade in this ascending range configuration since the low of 22nd of April. So every time we hit the upper limit of this ascending range, there's a bearish reaction from it. The previous bearish reaction was 16th of July, and now it has taken shape again as well over here. So now let us go to the lower time frame chart, which is the hourly chart over here. So no change. Still, this pivotal resistance zone will be very important. 149 figure, 14960. First support level to watch will be yesterday's level at 14790, where it managed to stage a bounce during the release of the CPI, release of the advanced Q2 GDP number, and stretching into FOMC decision release, followed by FOMC press conference by Fed Chair Powell. So this will be the first support level to watch. A breakdown below 14790 will kind of increase the odds of the intraday bears to come in to push it down lower to revisit 14720, which is the 20-day moving average, acting as the next intermediate support level as well. So these are the two key short-term support level to watch on the intraday basis. But however, for some reason, price action managed to inch higher and define our technical expectation going above 14960. Then we got to respect the price action, and we will start to see another round of, we call it short squeeze on the upside, where the bulls could come in to actually visit see the next intermediate resistance at 150 40 151.15, 151.30, which is the medium term swing high of 27th of March this year. All right, so that's for the dollar yen. So to recap, what we could see now is a bit of a K-shaped performance potentially on the FX market from a technical analysis perspective and from a fundamental perspective, where the dollar strengthened against other major currency. The Aussie dollar exception. Why? Because Aussie dollar today we may see a bit of bounce because of a intraday technical development on the hourly chart. But whereas for the yen, the recent yen weakness could see a potential flaw due to the current monetary policy stance by Bank of Japan, which I explained to you guys earlier. All right, so now let us now focus on the 6 major stock indices, starting from the Asia Pacific, which is the Hong Kong 33, representing the Hang Seng Index over here. So what you could see over here is that the Hang Seng Index plummeted downwards below our pivotal support level yesterday at this 25,200 level, 25,200 level. So what we could see now is that it really hit the oversold region over here. So there could be a bit of bounce taking shape. All right, given that it hit the oversold region. So as long as this bounce didn't surpass 25,220 short-term pivotal resistance level I have for today, we will have a short-term intraday bearish bias stance for the Hong Kong 33. Next support level to watch will be at 24,650, which is the rising 20-day moving average. A dip down below 24,650 may see the minor corrective decline phase extend further downwards towards 24,400. Only a bullish breakout and an hourly close above 25,220 will put the buyers back to the bulls for a retest at 25,520, followed by 25,750, which is close to the minor swing high of 24th of July. So that's for the Hong Kong 33. Next up will be the Japan 225, representing the Nikkei 225. So the Japan 225 continues to meet our expectation and shape a bounce over here after the retracement has made its target of the 61.8% Fibo retracement at 40,470, give or take. All right, so that was yesterday's low exposed US Fed Chair Powell press conference. So given that he hasn't broken above our first resistance at 41,110, I don't want to tighten my pivotal support to 40,470 unless we could have an hourly close above thereafter at 41,110. Then I will tighten it to 40,470. So for now, I'm still maintaining at 40,130 short-term pivotal support, which is the rising 20-day moving average as well. Next resistance level to watch after 41,110 will be 41,650, followed by the 41,940, 41,975 in first step, which is the 24th of July minor swing high. Only a sudden bearish reversal downwards and an hourly close below 40,130 that would invalidate the bullish bias for the Japan 225 to see another round of corrective decline sequence unfolding, exposing the next support level at 39,455, which is the 22nd of July 2025 low. Below it, revisit a critical medium-term support level at 38,940, which confirms very closely with the 50-day moving average and the previous range breakout resistance from May 2025 now turns into a key medium-term pullback support level at 38,940. So that's for the Japan 225. Next up will be the Germany 30. So the Germany 30 continues to bounce over here, now playing around with our first support level at 24,320. Okay, as you could see, it continues to evolve in this kind of sideways range configuration since the fresh autumn high that was printed earlier of 10th of July. So the lower limit of this sideways range will be at 23,930, where the bulls managed to survive since 16th of July. So I don't want to tighten my pivotal support to be at the 20-day moving average, where yesterday it managed to hold at 24,180. So this will be my first support level, just in case of any whipsaw, given that it's inside this range over here. So using the range bottom as my pivotal support still, 23,930. We will have a bullish bias for it to float back up towards the upper limit of this range at 23,140. So only a bullish breakout above 23,140 will increase the odds of a fresh impulsive up move sequence to scale fresh all-time high, with the next resistance coming in at 24,720 based on a Fibo extension cluster level. However, a bearish breakdown below the bottom of the range, which is 23,930, will invalidate the bullish bias and kickstart a kind of a corrective decline sequence, exposing 23,640 followed by 23,450, which is the minor congestion area here of 18th of June and 20th of June. All right, so that's for the German 30. Next up will be the US stock indices, starting with the US Wall Street 30, representing the Dow Jones Industrial Average. So the Dow Jones Industrial Average yesterday underperformed, it dipped down, but managed to stage a bounce during the last hour of the US session and float back up above the 20-day moving average. And where it bounces off the pullback line of this former minor descending trend line, drawn from the high of 7th of July, now turns into a pullback support level as well. So given a rather mixed element right now, I don't want to be so bearish right now as well, because yesterday dip also managed to find support at the 44,150 level. Okay, so what is this 44,150 level? If we do the Fibo retracement of that previous push up from 16th of July all the way down to the high of 28th of July that retested its previous all-time high, or the current all-time high of 45,100 that was printed previously in late December last year, that also constitute closely the 61.8% golden ratio as well. All right, Fibo, the key 61.8% Fibo golden ratio. So with that, I would have a neutrality stance today instead of an outright bearish stance, neutral between 44,780 and 44,150. So I'll be watching very closely the upper neutrality limit. So if we're able to have a push up above 44,780, then the bulls will start to come in again to at least retest the 45,100 current all-time high level. All right, so that's for the US Wall Street 30. Next will be the SPX 500. So the SPX 500 managed to stage a bounce right off the pivotal support level after a challenge close it, all thanks to metal and as well as Microsoft ex-post earnings price action. So it hit the first resistance level, which we highlighted earlier, 64.30, 64.50. So given that this strong push up, there could be at least some form of a minor pullback during the European session at this meeting line over here, right? This meeting line. Okay, which was the previous the previous opening level of this hourly black Marabozu candlestick at 2 a.m. Singapore time yesterday, which was due to the Fed Chair Powell rather not so dovish press conference. All right, that will be at 6395. So 6395 will be my first support level to watch. Pivotal support remains the same at 6370. Above 6450, the next resistance level will be 6470, 6490, defined by a Fibo extension cluster level, as well as the upper limit of this medium-term ascending channel that is in place since May this year. Only a bearish breakdown below 6370 will revisit 6340/6330. Below it may see the start of another minor corrective decline sequence, retesting the next intermediate support level at 6290, which is the minor swing low of 18th of July and 22nd of July. So that's for the SPX 500. Lastly will be the Nasdaq 100. So Nasdaq 100 also managed to stage a bounce as well from the 23,190 short-term pivotal support level that we highlighted earlier. So given that it's now coming very close to the resistance level at 23,710, which we highlighted earlier over here. So the next resistance level to watch right now will be at 24,016, all right, over here, based on the Fibo extension level. And if I do another Fibo extension taken from the latest minor bullish impulsive up move from the low of 2nd of July, oops, over here, let me do I will project it up. Okay, towards here. Okay, that also confluence very closely as well to the 24,020 level at 24,020. Okay, very nicely, very closely. Okay, let me put it in writing. Why is it not showing? Okay, let me. Okay, coordinates, yeah, 2420 020. Okay. Let me do a bit of adjustment. So this level has already been taken out. Okay, so the next level. Will be at 24,020. Okay, so right now, given that the hourly RSI is really at the overbought level, so that could be, and price action is now reaching our second resistance at 23,710, which is so very close to the upper limit of this medium-term ascending channel in turquoise green that I drew from the low of May this year. There could be a chance that price action may shape a pullback over here. So the first the pullback level to watch will be at 23,480 over here, and I will use this level here adjusted slightly. So this will be my pivotal support level. Oops. Okay, this minor swing low of 28th of July and the minor swing low that managed to survive yesterday, 31st of July, expose FOMC meeting. right? So this will be at 23,280, doing a bit of adjustment based on the latest price action, right? So adjusted slightly upwards to 23,280 will be my short-term pivotal support to maintain the bullish bias after this potential minor pullback close towards the 23,480 level. Above 23,730 sees the next resistance coming in at 24,020, which is being defined by a Fibo extension cluster level, which I did for you guys to see a while ago. Only a bearish breakdown below 23,280 will invalidate today's intraday bullish bias to kickstart a minor corrective pullback to revisit the next intermediate support at 23,020, which is the minor swing low area of 18th of July to 23rd of July, and so confluence with the rising 20-day moving average. Below 23,020 may expose or open up scope for a deeper minor corrective pullback towards the next intermediate support at 22,840. So that's for the Nasdaq 100, still maintaining our bullish bias after a minor pullback that may take shape using an adjusted upwards pivotal support for today at 23,280. So that's for the Nasdaq 100. Okay, next up will be the commodities asset classes. All right, so the commodities asset classes, let us start with the gold XAU/USD. So for gold XAU/USD, yesterday it tumbled below the 3,300 pivotal support level over here. So with that, now the honors now turns towards the bears instead of the bulls. So I'll be using 3,310 as my short-term pivotal resistance level for today, which is also the breakdown line of yesterday of this we call it ascending trend line support. Previously that was in play since the low of 16th of May. All right, so now turns into a pullback, a critical short-term pullback resistance level. So using 3,310 as my short-term pivotal resistance level, we will flip to a short-term intraday bearish bias for gold XAU/USD. Next support level to watch 32.64, which is the minor swing low area of 30th of June, followed by 32.45, which is the minor swing low of 30th of June. So this is the long tail shadow over here. So it's the hourly hammer low that was being formed of 30th of June. All right, so this will be the two key intraday support level to watch as we flip to a bearish bias for today on gold XAU/USD using 3,310 as my short-term pivotal resistance. Only a bullish breakout and an hourly close above 3,310, so that would invalidate today's bearish bias to see a squeeze up towards 3,334, which was rejected since this Tuesday. Only above 3,334 may see a further a deeper minor recovery to expose the next resistance level at 3,353 next. So that's for gold XAU/USD. Lastly will be the West Texas oil. So the West Texas oil, yesterday we flipped to a bullish bias, pardon me, from a bearish bias, given that it's broke out above the 200-day moving average. So price action tested exactly at the 20-day at this 6850/6915 short-term pivotal support level before it bounced and hit our resistance exactly at 7120 over here. All right, so given that price action now on the hourly RSI has starts to shape a bearish divergence. All right, notice that there's a bearish divergence over here. So there could be a form of a minor pullback now taking shape, at least on the intraday basis for West Texas oil, to actually work on this retracement that saw the West Texas oil rally very sharply in the last two sessions or last three sessions over here. So right now, there could be a chance of a minor corrective pullback taking shape given of this bearish divergence that's being formed on the hourly RSI. So for today, we will flip to a bearish bias to take advantage of this minor corrective pullback to retrace the previous, I think 2 days plus of sharp rally. You could see over here on the daily chart of West Texas crude oil. So on the daily chart of West Texas oil, we see a very sharp 3-day rally. So right now, with that bearish divergence on the hourly RSI, there could be a retracement of this sharp 3-day rally that's being seen on the West Texas crude oil. So let me share with you what are the key pivotal resistance level to watch for today in this bearish bias view. So over here, okay, I will use this 7120. So above 7120, we see the 50% retracement previously at 7170 over here. Okay, so let me put it in writing. Oops, where is it? Let me delete it. Okay, so this will be the pivotal. Okay, very close, 71.70 level. Okay, 71.70, 71.70. Okay, 71.80. Okay, let me round it up. Right, so 71.80, the short-term pivotal resistance level. I will flip to a intraday bearish bias for the West Texas oil for today, given that the element that I explained to you guys earlier. So first support level. Okay, let me tidy up everything. Over here, so first support level to watch will be 69.60. Okay, 69.90 or not 60, 69.90. All right, followed by this 69.15, 68.50 level. All right, this area here, which is also the 200-day moving average. All right, so using 71.80 short-term pivotal resistance level, flip to a intraday bearish bias for this potential minor corrective pullback to play out. Two resistance level to watch, 69.90. A breakdown below it may expose the next intermediate resistance, the next intermediate support zone at 69.15/68.50. Only a bullish breakout above 71.80 may see the continuation of this recovery up towards the next intermediate resistance level at 73.60, which is the close to the golden ratio of 61.8 of that previous steep decline from the high of 23rd of June to 25th of June, which is also the former minor swing low area of 19th of June and 20th of June. All right, so that sum up the intraday technical outlook on West Texas oil and the rest of the broad-based cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for today? So for today, we will have in the European session, we have the release of this preliminary inflation rate from Germany, which is out at 8 p.m. Singapore time. So for the preliminary inflation rate over here, the harmonized rate will be the core inflation rate in Germany. Market is expecting it to dip down slightly to 1.9% from previously month of 2% that was printed in the previous month. Then also we have the very important US PCE price index, which is the much more favored inflation gauge that the Federal Reserve officials are watching. So the core PCE price index, market participants is expecting it to dip up higher to 2.5% from 2.3% previously. All right, 2.3% previously for the month of June. And market participants will also be watching the personal income and personal spending figures as well. Then thereafter, we will have a rather quiet US session. Then do not forget over here is that today, after the close of the US session, we also have another two more mega cap technology stock reporting, which is after 4 a.m. Singapore time, 1st of August. On 1st of August, okay, it means after 4 a.m. Singapore time on the 1st of August. So that will be another two mega cap technology stocks, which is Apple and Amazon. Over here, let me share with you. Where is it? Okay, all the way down. Yeah, Apple and Amazon over here. So market is also expecting EPS of 1.42 for Q2 for Apple, and that's slightly higher from the previous quarter a year ago at 1.4. Similar for Amazon as well, a rather rosy EPS number at 1.32, up from 1.26 from the same quarter a year ago. All right, so that will be released at after 4 a.m. Singapore time today, which is 1st of August. So that could also potentially influence the movement of the S&P 500 and the Nasdaq 100, given that these are the two mega cap stocks in these two major US stock indices. So with that, do have a great day ahead. I'm Kelvin here signing off, and we shall speak again tomorrow. Thank you.